Hello and good day to all friends. I'm Ojtaba Rasti from the Thales team, and today is November 23rd, 2025. I'm here with you to analyze Bitcoin using the Thales Rocket Screener tool. First, let me point out that most likely in the coming hours, we'll be facing a scenario like this, a pullback to around 85,000 to 84,500, and then a continued move upward toward approximately 89,000 and 90,000. And from there, it's quite likely that the movement in the market will eventually turn downward once again, as we have seen in similar situations before. Let's go ahead and carefully review all of the available evidence for this particular scenario on the market screener. We set the filter from the trades at the start of today up to this moment for tomorrow's expiration on the first database, and you can see that 1,721 Bitcoins have entered the market in the form of 1,442 option contracts, which gives us this kind of curve. I'll turn on the delta indicator here as well. The delta index shows a volatile situation, but with a bias toward profit, meaning the profit side, the upper side of our red curve, is closer to profit. You can see the lower side is mostly in loss. The bottom of this curve is 84,000, which we've seen, and from there, our movement started upward. The peak profit is at 86,000, which we've already passed, and our ceiling here is 91,000. You can see the delta. As we move upward, the delta decreases until about 90,000. At 90,000, our call selling more or less reaches its peak, so we'll likely see a ceiling around 90,000. If this ceiling is broken, you'll notice a series of call buying starts, meaning the delta turns bullish with rising prices, and the price could go up to around 94,000, but 99,000 is where our ceiling is, and we'll have to see how the price reacts there, whether it can break through or not. If we move the slider forward to look at the most recent trades, you'll see the bullish leg comes down, and then toward the end, the bullish leg comes back up, meaning the likelihood of this upward movement increases. Here, the curve takes the shape of a put sale, as if traders have spotted a bottom at 85,000, roughly at 85,000, and from there you can see the groundwork for the bullish move started. From the trader's perspective, a bottom has been identified. If we go to the second process database, which shows higher volumes, you'll see the bullish situation becomes even more apparent. If we move the slider forward, this bullish trend continues and shows itself. Going back to the raw database, let's review the upcoming expirations. If we look at the 25th, you'll see that with 451 Bitcoins, there's a possibility of movement in both directions, but the bias is more toward a decline. If we move the slider forward, the downward bias becomes even stronger. So this tells us that the bullish move we're expecting for the coming days will likely be postponed. In other words, Here, if we see a move down to 82,584,500 and it doesn't hold here, if this short-term bullish trend breaks, we'll come down from right here. Otherwise, we can continue this move up to 82,990,000, and from there, the downward move will likely begin. Let's move on to the 26th expiration. The 26th is also bearish, with 337 Bitcoins, not a very high number, but again, you can see the bias is toward a decline. Below 84,000 is seen as profitable. It's gone into profit. If we look at the most recent trades, the intensity of this downward curve increases even more, meaning below 84,000 is seen as even more strongly profitable. Let's go to the end of the week, November 28th, which is an important expiration. At the end of the week, you can see the overall curve shows a bullish situation. But if we zoom in, we're actually facing something like this. Look, right now we're moving upward. And a bullish trend is dominant here. But what's the point? This upward move we're making could cause the red curve to go into loss. That means our call buyers have to tolerate losses up to 104,000, even up to 105,000, pay the premium, and keep their contracts open until their profit curve goes into profit at 116,000 or 117,000. That's the point, meaning they have to endure a lot of loss, while on the other hand, the put sellers, as you can see, with a price decrease, we actually have an increase in delta, which indicates put selling. Meanwhile, if you look at the red curve here, the put sellers are already in profit, meaning with just a slight move downward, they start making money, and their maximum profit is at 75,000. So we can see the floor at 75,000 here, which means the likelihood of the move going in that direction seems higher. If I move the slider forward, this bullish situation intensifies a bit, but the same story still applies. Here, call buyers have to endure some losses before they can actually start making a profit. But on this side, reaching profit is much closer. The profit peak is nearer here. Well, unless this bullish outlook gets much, much stronger in the coming days, especially by the end of the week, and everything changes, the equations and perspectives shift completely. Now, let's also take a look at the process database for this same end-of-week expiration, so we can exclude the trades marked in red, the negative open interests that have been closed. We'll set the open interest to 1. You can see that the same situation we described is still visible in the curve, just as we mentioned. And if we move forward, the situation becomes a bit more bullish, and in the end, it turns volatile. You see, it becomes volatile, meaning from 95,000 here, we see a ceiling, and here it's 70,000. So again, that's a noteworthy point. Let's go back to the process database for tomorrow's expiration, where you can see there's a mild bullish trend. That means we could go up to 89,000, just as we said, up to 89,000 with delta increasing along with our call sellers. If this breaks, we could even go up to around 92,000 or 93,000 at the peak. So that's the current situation. But still, you can see a lot of puts have been sold, and the floor is seen at even 80,000. So it's like we could have a bounce back up to 82,000 in the coming days. Now look at the process database for November 25th. It's all puts. Puts bought below 84,000. Again, for the process database for November 26th, it's still puts, below 84,000. So this is an important point we need to keep in mind. This bullish move is probably just a liquidity grab for a move downward. Now let's look at tomorrow's heavier trades in the process database. We'll set the size to 10 Bitcoin and above, and there are 16 trades. You can see here there's a strategy. The biggest trade here is a sale of 50 Bitcoin puts at 84,000, meaning the floor is seen at 84,000 for tomorrow. So this could confirm that we might get support around 84,000 to 85,000, and this bullish move we're seeing could probably continue up to 89,000 to 90,000. But still, the point we mentioned before is relevant. That is, the potential for a downward reversal, that bearish scenario that can be seen in the trades until the end of the week. We can actually see that. Let's take a look at the liquidation heat map. You can see it pretty much confirms this idea. There's low liquidity up top, and our liquidity is now concentrated below. On the 48-hour time frame, you can see that from 85 down to 82, we have a concentration of liquidity, especially around 83,200. But up top, the liquidity is low. Right now, we're in this bullish move, probably up to 87,500, maybe even 88. But as you can see, it's much less up here, so likely the liquidity up top will get collected, and then we'll probably see another move downward, considering the trades in the coming days and the end of the week. So we can keep this kind of scenario in mind. In fact, in the coming days, even until the end of the week, it's possible. Thanks for your attention. I hope this has been helpful.